Welcome to Gaming Fin, your channel for everything related to the gaming industry and the financial markets, my friends. And of course, we have to talk about Embracer. Embracer, the numbers are out. The stock is closing today with 3.18% up. So we see here the long all over chart, so going back to 2017. And you see we are a little bit, let's say we have a kind of sort of a resistance line to the upside at around about 24 zlotys. Not zlotys, Swedish krona. Zlotys is Polish. And then we were in the top, we were at 140 kronas, and you remember all how it went. So it went down, 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 down. So I'm not a financial advisor, retail investor myself and YouTuber, so please don't buy anything that you see here. So I expected actually we would see the 13, 15 Swedish crowns, but it seems that we were bouncing back from the 18s. So around about there, like I think in since 1 year. Let's see like this, the 1 year chart, to get a little bit better an idea. So yeah, I think we were also like 12% up today on the top, and then it was selling off a lot. So some people were expecting also better numbers, better earnings, and were selling then the stock. So, but let's see if actually the 17 Swedish crowns here can still hold, and if we can go back to get to the 30 Swedish crowns, and then maybe one day we can jump over this Fibonacci retracement. But I think to get over this, it still takes some time. So as I said, I'm invested in it. I'm in the minus big because I was actually not expecting this massive drop we had here from 55 to 2018 Swedish crowns. So but this happens. So when you invest, always invest small portions of your portfolio in one stock. Don't go all in one stock, of course. Be diversified and have different stocks. So that's most important, especially if you invest in different sectors. So Embracer, obviously, you were not buying everything in Embracer. So here also Embracer debt reduced to 1.4 billion, $1.4 billion as restructure continues. All right, so was it really billions? Was it really billions, guys? So I'm not so sure about that. Probably it was billions. So, and then restructure continues. Group says it has laid off 904 people since the process began. So I'm not going to read through the games industry biz article, but I recommend you to check it out. So I really like this page. Here the numbers, for example. But we, as always, guys, so we're going to go through this PowerPoint. We're going through the press release. So there's a lot of numbers and a lot of information coming. So, and yeah, information is coming, but a lot of unannounced titles by Embracer are not coming. So Embracer Group announces 5% workforce cut, studio closures, project cancellation. So this is from TradingView by Zinger. So following the collapse of major deal, Embracer Group has confirmed laying off 904 people, constituting 5% of its workforce. So that's, and the cuts are going to be in Volition, the studio behind Saints Row, and IGN reported, for example. And 15 undisclosed projects across multiple subsidiaries are going to be cancelled. And then the CEO, Lars Wingefors, so we are not watching the video today. I can do this the weekend if there's some interest, so leave me a comment. So Lars Wingefors emphasized the company's determination to become more efficient, but stressed the importance of conducting the process with compassion and integrity. That's how you do it. So I'm compassionate. I have integrity. You're fired. Just kidding, guys. Despite this, Embracer anticipates further layoffs due to ongoing restructuring and potential closure or acquisition. So they're not done yet. So more people going to be let go. Amid these challenges, Embracer noted progress in cost-saving measures and hinted at a consolidation process expected to accelerate soon. Process involving possible consolidation of companies and businesses is ongoing. Implementation expected to accelerate in the fourth quarter of this financial year. And then they say our restructuring program is making good progress with OPEX savings ahead of plan and CAPEX savings expected to contribute notably in the second half of the year. So we continue to take important steps for future, and I'm confident that we will emerge as a stronger company. However, this assurance might not alleviate the stress felt by the remaining employees, especially going into the holiday season. So reports suggest that potential closure of TimeSplitters developer Free Radical Design, I remember TimeSplitters, raising concerns among Embracer staff. Despite this tumult, some of the company's games like Remnant 2 and Dead Island 2 had achieved substantial sales success. Wow, nice. But yeah, a game that was not a big success, and this was actually Payday 3, and then also Warhammer 40,000 Space Marines 2 comes out, and people are looking forward to this game, guys. So all right, so let's go in the interim report. I think that's the easiest way. So if you have all the information already that you wanted, then thank you for watching, of course. So this is the chart. So where is it going? So guys, I don't know, it can go down again to 17 Swedish krona, but we can also move to 30. So to be honest, at this point, I don't really know. I think the restructuring process is still not over, and maybe at one point, so maybe when we get to the 16, really to the 16 or 17, then I would buy a little bit more to average down. But at the moment, I think I'm fully loaded. I have enough of Embracer stock, so therefore I'm definitely, or not definitely, but probably it's better to be now on the sideline. So interim report, everything always in Swedish krona. So net sales group, year-on-year growth of 13%, group organic growth -2%, and group pro forma growth, that's when they're acquiring actually other companies, -3%. Yeah, they're closing down studios. Adjusted EBIT, year-on-year growth -14%, so down, so it's down. And free cash flow is, I think that's with regard to the last year when it was in the minus, 936 million Swedish crowns. It's now actually in the plus. Adjusted EBIT forecast for then the whole fiscal year, 7,000 million to 9,000 million. So billions. So Remnant 2 Awakened comes out. Risk of Rain is also by Embracer. That's a cool game, great game. Stable second quarter performance and improved cash flow. Key internal IPs and studio performing well. Good progress on the restructuring program. That's what we want to hear. So they have huge layoffs, closing studios, letting people go, canceling projects. It's not so good. But it's happening. PC console games, net sales revenue split, and adjusted EBIT margin. So 16% margin now in the second quarter. So it's down again from the first quarter. Back catalog sales, second quarter, it's down again to the first quarter, or more or less stable. So it's good to see. If we compare it then with the last year, 2022-23, it's down, and it's up to 21-22. That's good to see. New releases, Payday 3, Jagged Alliance, Ride 5, and Remnant. So those are mid-tier games. So not a lot of people actually buy those games. They buy those games very often when they get them bundles, or they get them cheaper, or they're die-hard fans of it. So top 10 back catalog is now Dead Island 2 is a back catalog game. Deep Rock Galactic, for example, SnowRunner. And then we have the pipeline ahead, so that's still important. The pipeline includes Alone in the Dark is going to be a flop. I can tell you this already. Deep Rock Survivor could be a success. Lightyear Frontier looks interesting. Outcast is not going to be a huge success. Expedition is going to be a very niche game. Homeworld niche game. Arizona Sunshine is going to be a VR game. I think it's going to be good, but very niche game. And Space Marine 2 is the most important release, in my opinion, for Embracer, until they're going to be maybe announce one day a Tomb Raider title. This is also very important slide we see very often when we look at the Embracer report. So projected return on contribution to investments. And you can see quarter since release. That's a quarter since release. So quarter since release, then it actually gets better. So in the beginning, the return on invest is actually pretty bad, but it's getting better. So based on report numbers until September 13th, sample includes projects with sales above 40 Swedish crown millions or investment above. And then yeah, no, not more information. So it's really an issue with the break even. So it gets better with the time, obviously. Investments in completed game development. Investment in game development is decently high. And then we have value of completed game development. So it's also growing again. That's good to see, actually, that it's growing again from the quarter. So, but the second quarter is also has been better actually already last year. So mobile games jumping not over this for the reason that it's not important. I know mobile games is actually very important for the numbers, but I know that most people that are following me are not so much interested to talk more about those mobile games. Then we have a market update. That's maybe interesting. So global market sales. So also if you're invested in other gaming companies, that is something we have to keep in mind. So growing again, 23, we're more or less stable, 1% growth with regard to the year before, but we expect actually, or in general, Newzoo is expecting that we are growing again up to 2026. Console expected to grow 2%, PC expected to grow 4%, mobile actually is going to reduce or degrowing, minus 2% by financial performance. Gross margin development. What do they want to tell us actually with the gross margin development? Is it just a gross margin income? This would be actually more interesting. So cash flow and net debt. So here again, that's the number, the adjusted EBIT. So operating cash flow is falling. So I'm just comparing it easy. Then we see if it's falling. So forecast is important. Forecast, guys, that's very important. We remain confident in our forecast range. Second semester outlook for PC, console, mobile has, however, softened somewhat compared to our assessment in the first quarter. For PC console, it is due to the actual or expected performance of new game releases as well as minor probable shifts in the pipeline. For mobile, it relates to a slightly more conservative view on monetization and organic growth. In PC console game segment, solid earnings growth is expected, driven by a solid back catalog revenue from games released in the first half, as well as strong lineup of new releases across operative groups in the second half. In the mobile game segment, a mid to high single-digit negative organic growth is expected. Underlying market trends are assumed to be stable throughout the year. The adjusted EBIT margin is expected to be slightly above 2022 and 23. In the tabletop game segment, mid to high single-digit organic growth is expected, driven by both board games and trading card games. So, update on the restructuring program, very important, guys. So today's speakers. So reminder, improve efficiency and cash generation, transforming Embracer into a leaner, stronger, more focused and cash self-sufficient company. Here on the left side, we have the targets, OPEX, CAPEX, net debt. So below 8 billion Swedish crowns, so 8 billion exactly. Focus area, CAPEX, OPEX savings, operational expenditure, and it's what the CAPEX, I always forget what it is. So CAPEX is expenditure for, is it for investment, I think. So capital expenditure. Yes, capital allocation, efficiency improvement. So you see, guys, even if you talk about those things all day long, sometimes you forget what it means for the YouTube family. So timing. I like actually that we have a timing like this. So we are here. So are we going to reach it? Difficult. Making good progress on the restructuring program, they say. So first phase of capital expenditure reductions complete, currently deep into implementation of second phase of reductions. And then we have the OPEX savings, the operational expenditure savings, well on track, delivering reduction in both headcount and overhead costs. Tangible progress already visible, evidenced by the reduction in group headcount at the end of second quarter. So here, that's what we see, the headcount, internal headcount, developers, non-developers. Wow, they really kicked out 511 developers. So I hope this doesn't have too much an impact. 15 mainly unannounced projects were written down across Amplifier, Freemode, Gearbox, PlayOn, Saber, and THQ Nordic. Wow, closures or buyouts are in process and will lead to further headcount reduction. So that's the thing, guys. I mean, that's the thing. So at this point, the company was massively big, everyone expecting hundreds of new games, headcount was high, and everything of this. So, and then it was going down. And here at this point, actually, we are at the point where they are closing down studios. So they are diluting actually the stock price. So therefore the stock price goes down. So therefore the stock price is down, because if the company is shrinking, in real terms, with less projects, with less people working there, with less studios being part of the company, of course, then the stock price goes down. Making good progress on the restructuring program, capital allocation efficiency improvement. So in the past month, we accelerated processes to divest assets relative to increasing external funding of game development projects. We are now running a few structured divestment processes that give flexibility and optionality to reach our targets. Additional important steps taken to increase accountability and create new group-wide process for game investment and project reviews. Then we have efficiency improvements. Process involving possible consolidation of companies and businesses is ongoing. Implementation expected to accelerate in the fourth quarter. Goal is to design our structure and operating models to drive better execution, ownership, and decision making. So here we go, guys, and that's it. I wouldn't say green light. I wouldn't say green light now. So therefore, I think the stock was also selling off actually from 24.5 Swedish crowns to now 21.7. So therefore, it was actually selling down, because it's just the processes going on, and now actually company is going to they making the company leaner, smaller, thinner. So all of this is going on, and this means also the market cap in the end is not justified. That we go back like to 60, I don't know. So I mean, I don't make those calculations, to be honest. But I would say, guys, hold your horses for now. If you're invested in it, hold your horses. If you plan to invest, wait how this now plays out. Now in the at least this next week, and don't rush. It's really no need to rush. So actually really read those reports also yourself. Watch Lars Wingefors, see if you like him, and then decide, of course, on the basis of the numbers and your own research. So with this, I'm leaving it here. A longer video today, but I think it's always important to talk about Embracer, because it has been an investor's darling at one point, and it could become again an investor's darling. And of course, those people that bought cheap then can make a lot of money. But hey, who tells me that Embracer even survives? I mean, at the moment it looks good, but they get really, really much smaller. So I hope they survive. So I'm invested in it. So disclaimer over. See you next time. Bye bye.